Hi everyone, welcome to this month's Financial Markets Update and the last update for calendar year 2019. I'm Piers Bolger, the Chief Investment Officer here at Viridian. So it's been a really interesting back end to 2019. We felt probably through August and September that financial markets were looking a little bit more challenged. The growth outlook certainly, from our perspective, was trending lower. And then really through the months of September, October, November, we really saw some reasonable economic data come through, and that provided a fillip for financial markets. We saw some really strong investment performance. Equally, the potential trade deal between the US and China looked like it was coming to the end, and that there was potential for a trade deal to be signed. But as we stand here today, we've really seen that flip on its head over the last sort of 72 hours, and we've clearly seen that the trade deal won't happen this side of Christmas, and it's potentially most likely that we won't see something really come to the fore until the middle part of next year. And from our perspective, that's going to have a big impact on financial markets heading into 2020. From a positioning standpoint, that means that we're going to continue to maintain a relatively cautious position in the way we think about our asset allocation. We still fundamentally believe that equities are a better place to be relative to fixed income as an asset class. We think that the value is still in equities, albeit, as I said, that a moderating growth outlook and clearly concerns about the trade situation between the US and China is going to clearly drive corporate activity. So that's going to be a negative, and that's something, as I said, we're going to be really focusing on. The core for us when we think about 2020 and we think about the performance of asset classes this year has really been built around the need to have a broad-based diversified investment strategy. Equities have done phenomenally well. Fixed income has also done very well. We've seen property and infrastructure also perform exceptionally strongly through the course of this year. From our perspective, it's about packaging all of that into portfolio configurations that deliver the right outcome for our clients. And we felt by and large, when you're not having a bias to any one asset class through the course of 2019, that's really delivered quite solid investment outcomes. That challenge is going to be there for us in 2020, there's no doubt about that. As I said, hopefully we'll start to see some resolutions on a number of fronts. We've then got Brexit coming through, we've got the US presidential election, and potentially we've got QE starting here in Australia should the RBA continue to cut rates further and we don't see that growth outlook come through as they're predicted. So it's going to be a really interesting 2020 as far as we're concerned. Financial markets have got a lot to digest, and the way that we're positioning portfolios is going to have a big impact in the way that we think about delivering those outcomes for our clients. As always, if you have any concerns about your investment strategy or your portfolios, please reach out and speak to one of your financial advisors. As I said, enjoy your break, enjoy your Christmas, and we look forward to catching up in 2020. Bye for now.